Everyone, let's talk about everything you need to know about this new Facebook Libra coin. We're going to be talking about what it is, how does it work. We're going to go into tech perspectives. We're going to look into, should you be investing? Can you invest in this thing? How does it all work? What are the ups? What are the downs? Am I pro? Am I con? What does it mean for Bitcoin and all the other currencies? Let's dive in and let's have a look. And I prepared a PDF. Let me do the screen share so you can see this. You should be seeing my screen right now, at least I hope so. PDF on the left, you will see a little picture of me on the right, and we're gonna dive all the way through and we're gonna really look deep into it. Now, you can have this PDF. There's a link down below in the description. You fill in your email address, iunlimited.de/YouTubeEN, and you can have this PDF. I'll send it to you afterwards, and yeah, then you can have this as well. Obviously, please understand this is obviously copyrighted by me. You can see this at the bottom. I put in all this work, so this is also key. We're recording this 18th of June. The white paper and all this stuff came out this morning. I dug through close to 100 pages, and I think I kind of covered it all, and that's going to be really, really important. So Facebook released this white paper explaining Libra and its testnet before the public launch, which is going to be in the first half of 2020, and we're going to look into this. Interesting, just as a quick kind of overview up front, this white paper signed by 53 people, and there's some really heavy tech hitters in there, MIT professors and so on, like really, really powerful people. But a quick, interesting thing, the CEO, Mark Zuckerberg, and the blockchain lead, David Marcus, quite knowledgeable in crypto, are notably absent from the author list. Very, very interesting. Now, what we're going to be discussing, we're going to go through this stuff. You can find all the official information. A lot of it is basically taken from there. I'll link it up below. You can just go to libra.org and you can see all this. But we're going to be diving through. Now, what Facebook is basically starting with is a problem description. What they got describing is, well, Bitcoin and Ethereum are not at scale to be a medium of exchange. Now, this is partly true. I don't totally agree with it, but that's how they kind of start. They say that the price is fluctuating and therefore it's difficult for merchants to use. They are right with this at the moment. They say that they have 1.7 billion people that lack a bank account, probably a fact. And well, remittance services charge 7% to send money abroad. They take around 50 billion a year from users. And so since there's all these problems, the banking world cannot deal with this, the supposedly crypto world can't do it, Facebook, ta-da, we have the perfect solution. And this perfect solution obviously is this entire system of Libra. And that's what they then are describing. Now, my input on this is, I partly agree that Bitcoin Facebook might not be the best medium of exchange. Could be, I don't see Bitcoin as much as a currency, as more as digital gold, as an asset, you notice. And so it's interesting to kind of see how this is playing out. So let's look how this actually is set up. Now, this entire thing is set up as an association. It's a nonprofit based in Geneva in Switzerland. The reason is very simple. Switzerland is very independent, very financially strong, and it's open to blockchain. So that's how this all was formed. They're meeting biannually, and each member, and we're going to be discussing the 28 members that they have already, and they want to have 100. Of them, one is Calibra, and Calibra is a subsidiary of Facebook. So just so you understand this, the Libra Association sits in Geneva. Many, many people think that Facebook registered a subsidiary in Geneva. That's wrong. It's a nonprofit. Calibra is a subsidiary of Facebook, and that thing is one of the founding members. And we're going to discuss how this works. Now, in order to be a founding member and to be part of this association, you can have a look at this. That's how this all got set up. You need to have 100 megabit or higher internet connection. You need a full-time, reliable engineer, and you need to have, as a business, 2 out of the following 3. You have either $1 billion market value or 500 million in customer balances. You need to have you need to reach 20 million people a year, and or you need to be recognized as a top 100 industry leader in your field. That's for regular businesses. If you want to be part of this association and you're a crypto-focused investor, you must have over $1 billion in assets under management. As a blockchain business, you need to have been in business for at least a year, which is actually quite a small way to get in there. And you need to have in custody or staking greater than $100 million in assets. That's actually quite reasonable, probably for a couple of crypto companies. Only 1/3 of the founding members can be crypto related. That's important. And also research organizations like universities and nonprofits, there's also some ways to get in there, can be part of this. And so far, they have 28 quite renowned founding members. We're going to take a look. So this is quite powerful how this association got started. And to me, this was a big eye-opener, actually. It's always said that Facebook is doing this, but it's actually not the case. So yes, Facebook has initiated a lot of it, but they are doing a very smart job there, and I'm going to be highlighting this. Now, what they want to do is they want to increase these founding members up to 100. So that's the goal. And if we look at these companies here, you can see, and I'm just kind of mentioning companies that I know personally, like there's many, many others probably that are really famous. So we have Vodafone here, we have Visa, we have Lyft, we have Stripe, we have eBay, Spotify, we have Xapo, we have Facebook with Calibra, obviously. We have PayPal, we have Coinbase, we have Uber, we have MasterCard. So these are some massive, massive, massive hitters. Andreessen Horowitz, huge investment fund. So, and many, many, many others. And so these are some really heavy hitters that are part of this association. And that's key to understand in this entire perspective. So this is not something that's tiny. We're talking about global players being part of this. So this is something that's very important to understand. And now when we look at the governance, how this entire thing works, it is not Facebook or Mark Zuckerberg who does this. It's actually the association that does this. And here's the thing. Each member has a maximum of 1% vote. That's the maximum. That's actually a really big eye-opener to me. And the interesting thing about this is it actually is going to avoid a lot of scrutiny from regulators. Because who to go to? First of all, it's an association in Switzerland, which is quite protected already. And then I can't go to Facebook because Facebook is going to say, well, I'm sorry, I only have 1%. To me, it's a really smart part. There's so many other parts that are there. And so this is actually how all this is happening. So all these members, they act as validator nodes on the blockchain. So we're going to be discussing this when we talk about the tech. They are in charge of the fundraising. They are part of designing an incentive program. And then in order to become a member here in the Libra Association, these people need to pay $10 million US. But what they're getting in return are so-called investor tokens. Now, they can also invest more. They get more investor tokens. And then in percentage, they are getting dividends from this. And we're going to be discussing the profits out of all of this. But so basically, this is how this works. So these members need to pay the $10 million. And in return, they get these investment tokens. And they get dividends as interest on the deposits that people are making, so that the users are making. And obviously, depending on how much deposits there's there, this could be billions of dollars. This is quite a lot of interest. The next thing that these founding members benefit definitely from are transaction fees. Now, they don't talk about how much, but this is definitely going to be something also the merchants will benefit from this. Then I can assure you there will be conversion fees to go from a regular currency, a fiat currency, or any other cryptocurrency into Libra. That's also going to be definitely some kind of fees there. Then obviously that data, that's something we are going to be talking about a bit more detailed. There's actually quite a positive surprise there, but that's definitely something that they're going to benefit from. And then, and this is something that I was not really surprised, but really positively amazed. The time horizon, and I really use that term because I wrote this book, The Time Horizon Principle, but Mark Zuckerberg's time horizon on this is very powerful. So for him, it's not so much about squeezing out tons of cash out of Libra immediately. It's really more about playing the long game. And this is a quote here. If more commerce happens, then more small businesses will sell more on and off our platform, and they'll want to buy more ads on the platform. So it will be good for our ads business. And totally, this makes sense. But I also think, and we're going to be discussing this, I think friction is going to be really powerful if I create this new cryptocurrency that is part of this entire group. And this currency can flow around in this entire group here that we're discussing. And flowing around without much friction, borderless, that's going to be quite interesting and quite powerful. And I think there's going to be massive, massive, massive interest there and massive profits for this group. Now, obviously, also time horizon, basically, they're going to be able to add a lot of other things on top of that. They're going to have a record of people. They're going to have a credit record, investing completely revolutionizing, lending completely revolutionizing. So that's going to be really, really, really interesting in this entire concept. So this is kind of the legal foundation, how this all is set up. It's actually set up quite decentralized. So I'm not saying it's decentralized at all. Like, don't get me wrong. It's completely permissioned. In order to get part of this, you have all these really crazy obligations to do. You need to pay $10 million. You get investment tokens and you get some profits from this. But still, like, this is some massive hurdles. But it's way less centralized than I was expecting at the very beginning. And this is actually quite positive. So let's look at this coin. The Libra coin, which is basically issued by this foundation, is a stable coin. And tada, lib just means free. So like, it's the freedom coin if you want to call it. And the value of this stablecoin is tied to a basket of bank deposits and short-term government securities in various currencies. The reason this is important is so it's not tied to the success of one individual currency, but it's actually a basket that can be deposited. A key thing, it never runs fractional. That's important. And obviously, this coin can be run in various wallets. The Calibra wallet is the official wallet that Facebook is going to be using. I could imagine that because this is going to be open source, that many others are going to build on top of it. So the Calibra wallet is from Facebook. It also runs on Facebook Messenger. It's going to be running on WhatsApp, and that's going to be obviously interesting how to use this coin in there. Now, how do you get this Libra coin? It's very simple. You can trade your local currency, whatever is going to be accepted for Libra. A deposit creates the fiat currency. A withdrawal burns the Libra coin. The key thing is there's no monetary policy. So it's not that Facebook or this foundation goes and can create coins. It's really deposit, you create it, withdraw, you burn it. And I think that's a very straightforward, simple concept. So it's how stablecoins should be. Hopefully this coin is going to be like this. Now, the key thing here is there's no exact conversion rate yet. So it's going to be a stable coin. So it's going to be tied to something. It could be $1 is one Libra coin, €1 is a Libra coin, but it has to be at somewhere that has to be this peg. That's going to be interesting. So that's going to have to be released in the future. And basically, this coin is being issued by this foundation that we just discussed. Where? Well, at any of those companies, basically, they're going to be able to allow this. So you could do this maybe at Spotify, you could do this at Uber, and so on and so on and so on. So that's going to be very interesting. Now, obviously, and this is a key part. Let's talk about a key part here, and that is the privacy. Now, we have this cryptocurrency, and it is an actual cryptocurrency because it's a currency run based on cryptography. So that's very, very straightforward. But privacy-wise, and I was really worried about this. So this was something that really, really worried me. Now, I knew that this thing is going to be very centralized. Actually, it's a bit more decentralized than I was kind of expecting. But obviously, the privacy part, that was really worrying me. Now, there's some good sides and some bad sides. The good side is, per se, on the protocol level, there's no KYC needed. But obviously, as soon as you get into applications, every application can decide and can choose to interact only with others that use KYC or not. The Calibra wallet per se, so the wallet that Calibra is basically using to get these Libra coins, it will have custodial access. And basically, it has up and downsides with this because you need the KYC. But also, if there's some fraud, they can refund, and they talk about that. Remember, and that's a key part, Calibra is a subsidiary of Facebook, and they really try to keep your data separate from Facebook. Facebook won't import your contacts or any of your profile information, but may ask if you wish to do so. And this is a quote, so that's going to be interesting. So I don't know, maybe there's an incentive for you to allow to do this. Maybe they are kind of making, yes, you don't have to, but it's kind of automated to do it. So they say they want to keep data separate, but let's see how this is going to work. Now, obviously, the possibility for it to be there, that's actually a good sign, even though I think a lot of people will just have their data mingled. And this is obviously the most powerful thing out of all of this. So if I look at time horizon, right, looking into the future, what's going to be important? What I think what Mark Zuckerberg understands here is that one thing he doesn't have at Facebook, he knows what you want, who your friends are, what you like. He knows everything except your finances. And finances are so crucial. If you think about it, if anything ever happens, the first thing the police or anyone looks at is your finances. Where did you spend? How did you do it? And so that's going to be really, really, really important. And so obviously this part of the privacy is going to be a huge criticism. It could be a huge, powerful thing in a positive side. And so obviously for the stablecoin, that can be very, very interesting. Now let's look at some of the tech here. The tech is, well, up and down. It's a permission blockchain. Obviously, if you wanna be one of the nodes, you have to be part of the founding members at the moment. You need to have all these criteria. They're 10-second blocks. It can be super fast because obviously it's very centralized. So 1,000 transactions per second. Yeah, that's all doable. It doesn't use a UTXO set like Bitcoin. It uses an accounting model or an account model like Ethereum. Now, this is up and downsides. We're not going to go too much into details. I have other videos on this. One of the massive downsides is then you have very little privacy because with all the UTXOs, with every transaction, you basically create a new UTXO, and that increases privacy. But so that's just for those of you that are tech geeks, I just want to highlight this. It's Byzantine fault tolerant. It needs 2/3 of the nodes to come to consensus, which shouldn't be too difficult because, I mean, obviously, let's face it, at the moment, these are all, very buy-in nodes. They all kind of support each other. They call it the hot stuff consensus. Quite straightforward. That's how they do it. It doesn't need much to create consensus because everyone kind of knows each other. And you can assume that you don't have more than 1/3 of bad actors. I mean, come on, it's this association, right? I highly doubt that. And these are very reputable large corporations. Well, obviously, there are some small fees for spam protection, and in my opinion, in my honorable opinion, some income, also for the merchants, but also for the foundation itself or for the association. And that's obviously a key part. The association says if there's any problem, they can halt any transactions. So that's key. Whenever there's this possibility, it's not decentralized, it is centralized, right? So that's a key part to always remember this. If you ever have a blockchain that stalls, that fails, that has a lockout, a timeout, that can undo certain things, it's centralized. Very, very key in this entire part. A key part that at least the Libra Association wants to do, let's see if they can do it, they want to move to a permissionless system, but it's one of the hardest parts to do. It's so difficult to go from centralized to decentralized. They want to have a proof of stake model where basically the staking is similar to like this entry fee, if you want to call it. And obviously they want to encourage competition. They want to encourage a lower barrier to entry. Let's see. To me, it sounds a lot like Facebook has similar problems as Ethereum at the moment. They're trying the same things. They try to get speed. They try to get decentralized. They try to get scaling. They try to go to a new consensus mechanism. So like, it sounds like this, right? It's going to be very, very interesting how this plays out and actually how these things help each other. If we go into the coding a bit more, they're going to be using the Move coding language, which is going to be open source under Apache 2.0. Now, this is a very new coding language. It's actually not finished yet. So at the moment, they're running on Rust, which is very, very security strong. So that's important. The reason they want to do this is because they want to have an easy to write blockchain code language that follows the author's intent without introducing bugs. And I really congratulate them on this. I hope that they're not doing the same mistake that Ethereum has, where they have this coding language that, yes, is Turing complete, but it has so many bugs in there, and it's really buggy and dangerous. And so and that sounds solid. So actually, that's quite positive. Obviously, the primary focus of this coding language is to move coins, and you can look at some of the coding lines and some of the functions, and it's very, very straightforward. It's to move coins. Now, I have seen some explanations that say that there's no smart contracts, and that's BS. So there are smart contracts, but they're very, very, very basic. So it's not like Turing complete like Ethereum, but there is definitely some functionalities in there. We need to wait, though, until Move is finally finished and what's called modules are actually done. Now, the testnet is live. The live net is going to be live in 2020. And so there's a bug bounty system. You can try it out if you're coding, if you're a geek, test this, play around with it. They want to keep this open source. So that's definitely going to be something that's very, very interesting to see. And so obviously we talked about now the entire foundation. We talked about the coins. We talked about the tech. Now let's look at what does this mean for the entire ecosystem, right? And that's going to be a very, very interesting one. In order for businesses to join, they will have incentives. And this is also obviously part of the entire, of the early foundation to help there. With the transactions, merchants will receive a percentage of the transaction back that comes from the transaction fees. Obviously, that's going to be humongous if you think about this. You have so many currencies in the world, and many, many currencies are not much used. So I think in Facebook, there's like 80 different currencies, and Spotify, Uber, and so on. They all have these different currencies. And so imagine if they're all going to be integrating Libra as their main currency. And yes, you might have the dollar, you might have the euro, the Swiss franc, but maybe you have 5 major fiat currencies, and then you have this currency. I really believe this can be a breakthrough. And I mean, you have these massive, massive, massive companies that will never go out of their way and accept any kind of decentralized system. But you will have the centralized system there, and I think it could put massive pressure on the centralized banking world at the moment. It's going to improve, in my opinion, a lot of the friction there. Obviously, for remittance, it can be a huge solution. If you just think about using this stable coin, many, many stable coins, many, many banking coins, payment coins that are centralized are going to get massive pressure with this and with this entire ecosystem. One thing that I could see is that advertisers, for example, will have to pay with this new Libra coin. I really believe that by 2025, many of us, even though we're saying, no, we will never use this coin, if we're just using these services, probably we will be using them. And the reason is just because they will pressure users to use this new coin. And I think as long as we have the options to opt out, there is not much difference to using a credit card. And so I believe that there's not going to be much way around this. Now, obviously, what's going to be interesting is to see the content creators. Will they have some incentive? Like, I don't know, YouTube pays for ads. So maybe here the content creators are going to be paid in Libra Coin. Drivers, for example, at Uber and so on. So that's going to be very interesting to see. And then obviously with the Libra Coin, because it's going to build this partner ecosystem, that's going to be interesting. People can also get these Libras without having access to a bank account. Because so I could be selling, for example, something on eBay, but I'm not getting fiat, I'm getting this Libra Coin. And so this would be a way, for example, in Africa, South America, to actually get these coins because you have this network of systems. And that's been one of the major hurdles, for example, that Bitcoin always had, because it doesn't have decentralized backing. Obviously, it has all these other upsides, but this has been one of the struggles, is how does someone who doesn't have access to the traditional financial system get into Bitcoin in the first place? Because you need somehow an exchange or you need to do something. But now suddenly, when you have all these partners working there, obviously it can be powerful to push this coin into the people. And that's, I really believe, like, I had an interview today where the person asked me, Julian, do you ever think you will be using the Facebook coin? And I said, I don't think it's about choice. I think in probably 5 to 7 years, many people are forced to use it. There's no way around it, because the services that we all used to are suddenly kind of, well, we got to use it. There's no way around it. And so I think as long as it does not too harmful things, I think we are going to be using it. And so obviously, what is my opinion on all this? What does this mean? What does this mean for the Facebook coin? What does this mean for Bitcoin? What does it mean for altcoins? And initially, I was super skeptical about the Facebook coin. I thought it's going to be stupid. I think it's going to be just a data theft. And it still could be. I mean, there's still some questions open, right, as you can see. But honestly, I'm quite more positive right now. I really have to say that. I think the coin is going to do well. I think Bitcoin is going to benefit massively, because I really believe this Libra coin could become a global currency. I could totally see this, especially when more international companies become part of it. And I can see this because now there's the white paper out, there's these 28 initial members. Wait until Asian companies go in, African companies go in, European, and so on. And suddenly you're going to have this global initiative. And I can really see this because they're talking to each other. They have tech companies. Everyone wants to get independent from the currencies. So that could be really powerful. And I can see that Bitcoin becomes this global reserve. I think it's going to strengthen Bitcoin massively. I think I could totally see this trading pair, Bitcoin to Libra coin, can be one of the strongest trading pairs out there. It could replace any other kind of trading pair. I think it's going to flush a lot of people into Bitcoin, and I'm very positive about this. I do think, though, many stable coins, many payment coins, many of the banking coins will be massively pressured. I think many altcoins have no more reason to exist. And well, on the one hand, this was kind of expected, because the hardest part in a cryptocurrency is not scalability, it's not speed, it's really decentralization. And in my opinion, at the moment, there's only Bitcoin who has true decentralization. All the others are super far behind. And the step from being centralized to being decentralized is massively difficult, because you have to remove the people responsible, and it takes a lot of time. It takes ego to go away, so it's really difficult. Now, obviously, the question is, what does this mean for you right now? Well, the Libra coin is definitely not an investment. It's a stable coin. So like, it makes no sense to think about investing unless you can be a founding member, you qualify, and you have the $10 million to qualify for this, smiley face. Then you can be part of this. And then you should think about this, because I really, anyone who's watching this video and who can qualify for this, I would highly recommend you thinking about this. Very powerful. There's a reason why a lot of these strong companies are doing this. And then obviously, if you are a user and once the Libra wallet comes out, play around with it, test it. I think there's going to be a lot of things on there, and I think the early adopters can definitely have a head start there. If you are a developer, play around with the testnet, play around with the Libra wallet. I think that can be very interesting and very powerful. This is the basic rundown of 100 pages of technical white paper, of general white paper information on the website, summed up in around 25 minutes. I hope it gives you massive value. I hope this really kind of explains and summarizes everything there is about this. You shouldn't have much more questions. What I would be interested in, what is your opinion about this? What do you think? Do you think I'm wrong somewhere? Obviously, there could be some mistakes. I had half a day to kind of look through all this stuff. But let me know your opinion. What do you think about the Libra coin, about Facebook, about its impact, about the ecosystem, about the future? Would be very interested. If you want to have this PDF, I'll link it down below. You can fill in your email address. I'll send that to you. I would love if you give me a thumbs up. I would love if you subscribe to the channel. If you want to have more info about my new company, I'll link it up below as well. And yeah, with that, I hope you're getting value out of this. Please share this so other people will figure out about all this, and I'll see you at the next video. Yours truly. Thank you so much, Julian.